Welcome back to Pennywise Perspectives, your go-to channel for everything personal finance. Today, we're diving into a crucial topic that's often overlooked: the power of compound dividends, growing your wealth over time. Money has the remarkable ability to multiply when it's invested wisely, and one of the most potent tools in the realm of investing is the power of compound dividends. It's a financial phenomenon that can significantly grow your wealth over time, and understanding it is essential for anyone looking to secure their financial future. In this article, we will delve into everything you need to know about compound dividends, how they work, and why they are a vital component of a successful investment strategy. Disclaimer: I am not a financial advisor. The content provided in this video is for educational and entertainment purposes only. Now, let's dive into today's topic: understanding compound dividends. At its core, compound dividends involve reinvesting the dividends you earn from your investments back into those investments. Instead of cashing out your dividend payments, you use them to purchase more shares or units of the investment. This reinvestment process allows your investment to grow exponentially. Imagine you own shares of a dividend-paying stock. When that company generates profits, they may distribute a portion of those profits to shareholders in the form of dividends. These dividends are usually paid out quarterly or annually. Rather than taking these dividends as cash, you can choose to reinvest them by buying more shares of the same stock. This means that with each dividend payout, you acquire additional ownership in the company. The magic of compounding. The true magic of compound dividends lies in the concept of compounding. When you reinvest your dividends, you not only earn returns on your initial investment, but also on the reinvested dividends. In other words, you earn interest on your interest, and this compounding effect can significantly accelerate the growth of your investment. Over time, this compounding effect snowballs, and your investment can grow substantially. Patience is key. The essence of compound dividends unfurls most brilliantly when you embark on a long-term investment journey. In this realm, the adage "time is money" couldn't be truer. The length of time your investments have to compound significantly influences the scale of the impact on your wealth. This principle underscores why many accomplished investors place utmost importance on patience and endorse the buy-and-hold strategy as a cornerstone of their success. Compound dividends aren't a quick fix. They're a gradual wealth-building process. Imagine them as the sturdy roots of a mighty oak tree. When you plant the seed, you may not see much for a while. But as the years roll by, those roots grow deeper and stronger, providing the stability for a towering tree. Similarly, with compound dividends, the more time you allow for growth, the more significant the financial tree you can cultivate. Magnifying wealth over time. Compound dividends can be likened to a magical growth formula. In the early stages, the growth may appear gradual, almost inconspicuous. However, as time progresses, the phenomenon accelerates, and your wealth starts multiplying at an astonishing pace. This magical quality of compound dividends emerges because you earn returns not only on your initial investment, but also on the reinvested dividends from previous periods. Consider this hypothetical scenario. You allocate $10,000 to invest in a dividend-paying stock boasting a 4% yield. During the first year, your investment yields $400 in dividends. Instead of pocketing this amount, you make the wise decision to reinvest it by purchasing additional shares of the same stock. In the second year, your dividends are not merely calculated based on your initial $10,000. They encompass the extra shares acquired through the $400 from the first year. As this cycle continues year after year, your wealth compounds exponentially. But here's where patience comes into play. The substantial growth isn't just about the dollars and cents. It's about the time factor. The longer you let this compounding process work its magic, the more pronounced the financial gains become. It's akin to watching a snowball roll downhill. It starts small, but gathers size and momentum as it goes, and the longer it rolls, the bigger it gets. The buy-and-hold strategy, a time-tested approach. The synergy between the power of compound dividends and the buy-and-hold strategy is both profound and enduring. This approach advocates the acquisition of quality investments with long-term potential, followed by steadfast ownership without frequent trading. By patiently allowing your investments to grow over an extended period, you minimize the disruptive impact of market volatility and leverage the compounding effect to its fullest extent. Consider Warren Buffett, one of the most successful investors in history. He often quips that his favorite holding period for stocks is forever. This exemplifies the power of patience combined with a buy-and-hold mentality. Buffett's wealth has compounded enormously over time through this strategy, turning him into a billionaire many times over. The buy-and-hold strategy isn't about a frenetic buying and selling dance in the market. It's about selecting well-researched, fundamentally sound investments and then having the patience and discipline to let them flourish. It's a philosophy that acknowledges the long-term potential of these investments and their ability to weather the storms of short-term market fluctuations. Risk and rewards, navigating the investment landscape. While the allure of compound dividends is enticing, it's essential to recognize that they are not without their own set of dynamics and considerations, which include risks and rewards. Risks. Every investment journey has a landscape fraught with risks. The values of assets like stocks, bonds, or real estate can oscillate due to a plethora of factors such as market conditions, economic fluctuations, corporate performances, and geopolitical events, to name a few. It's imperative to bear in mind that past dividend performance does not serve as a crystal ball for predicting future results. To prudently navigate these waters, portfolio diversification is a key strategy. Spreading your investments across various asset classes and industries helps mitigate the impact of poorly performing assets on your overall financial health. Consider the Great Recession of 2008 as a cautionary tale. Many investors who are heavily concentrated in a single sector or asset class experienced substantial losses. Diversification can help shield your portfolio from such severe blows. It's akin to not putting all your eggs in one basket. If one egg breaks, you still have others intact. Now, time to talk about the potential rewards stemming from compound dividends, which are undeniably alluring. By strategically directing your investments into dividend-yielding assets and perpetually reinvesting those dividends, you set the stage for the accumulation of substantial wealth over time. Furthermore, dividend-paying stocks often provide a dependable stream of income, a valuable resource that can be channeled towards fulfilling your financial goals, such as retirement planning or funding educational pursuits. The power of dividends doesn't solely lie in the growth of your initial investment. It's also about the income generated along the way. For retirees or those seeking financial independence, this consistent income stream can be a game changer. It offers financial security and peace of mind, allowing you to maintain your desired lifestyle even during retirement. Tax benefits. Many countries offer tax-advantaged accounts, like individual retirement accounts, IRA, or tax-free savings accounts. These accounts provide a tax-advantaged environment for your investments, allowing your wealth to grow more efficiently. In the world of finance, time is one of your most valuable assets. The power of compound dividends leverages time to grow your wealth exponentially. By reinvesting your dividends and maintaining a long-term perspective, you can harness this financial force to secure your financial future. However, it's essential to approach investing with knowledge and care, recognizing that all investments carry some level of risk. Consult with financial professionals and consider your investment goals and risk tolerance as you embark on your journey to harness the power of compound dividends and grow your wealth over time. Compound dividends can be a game changer in your journey to financial independence. By understanding how they work and having patience, you can maximize their benefits and build a more secure financial future. Please comment below any money-related topics you'd like for me to cover in a future video. If you loved today's valuable video, consider smashing that like and subscribe button. Don't forget to share it with a friend. Together, let's embrace abundance, develop financial intelligence, and make our dreams of financial freedom a reality. Fam, have you seen these awesome t-shirts? Make sure to check out my Etsy shop by using the link in the description below and rock these funny tees like a boss. Thanks for watching, and we'll catch you in the next video.